conference will now be recorded.
So now, so after that we have discussed about before we make any configuration, we must understand the system landscape, correct? So how many, so what are the system in the system landscape, how many systems we have in that systems, what are the clients we have, and in that clients, so who are like who and all the resources will perform their activities. So what is our consultant role? So we'll be configuration, we'll be configuring in the development, and we'll be doing the unit testing in the development itself, and we'll be deploying the same to the quality for the end user to test. Once the end user test it, they will give the sign off. After the sign off, we'll move our changes to the production. So we have also a sandbox system where the client have, so that we can use a demo, we can do the demo configuration if the client has a new functionality. So they requires a new functionality. So now what we will do is we'll be configuring in the first the sandbox and see whether that will be suited for the client or not, and then only we will be going and doing our required configuration in the development system. So after that, so in today's class we will be discussing about data flow in SAP FICO. So how the data flows? So first there will be business requirement. First we will get the business requirement. So who will give the given or done by? So who will be giving us the business requirement? Either the client or user. So second, after the business requirement, what we will do? We'll do the configuration. So the configuration is done by whom? By SAP FICO consultant. So after the configuration, we'll be setting up the master data. So what is master data? Master data is nothing but the suppose for example, you are creating a vendor in your company code, correct? So how will be creating the vendor under the master data? So the GL accounts, vendor accounts, customer accounts, all will be coming under the master data. So master data is prepared by the client or user, and this master data is created in every client. So if you see here, okay, so that is not there. I didn't discuss yesterday, so let's discuss it now. So master data. So master data, what we'll do is we'll be creating in every client. Suppose we have development client. So in development client, so in development system, we'll be creating in every client, and also in quality system, we'll be creating in every client, and in the production also we'll be creating manually. So it is not like your configuration. So in the development, once you do the configuration to the TR, you can move to the quality, and also to the TR from the development only. If everything UAT sign off is done, you can move the same to the production. But now how will be transferring, how will be creating the material like master data in different systems? So through LSMW or else LTMC. So through LSMW and LTMC, we will be creating a template. So in that template, you will be giving all the required data so that you can upload across the systems. So without going to the individual processing, you can do the mass processing. Now, after that, you will be doing the transactional data. Who will perform transactional data? Client or the user? Where? Across the systems. After that, reports. So they would be standard reports and the custom reports. So if the client want custom reports, then they will be coming to us to create the custom reports. So to create the custom reports, what we will do is, so this is like FICO consultant. So reports are developed by the FICO consultant. So we will be creating a functional spec in the sense where all the so how the report is. So what would be the report front end screen? Like what is the input screen of the report, and so what is the logic? So we'll be giving like the tables, and from the from the tables, like from which table the particular data should be picked up. Everything we will have there. The sixth one is support. So after that, we will be giving the support for the client. So after that, will be if any enhancements or improvements. If we receive any enhancements or if improvements, that also we'll be doing. So enhancements in the sense, so like there is an existing program. So in that program, they want a few more need to be implemented, so that we'll be doing the implementation for the same. And whereas the improvements in the sense, so we'll be getting like a new functionality in an SAP. What we will do is, so based on that new functionality, we'll be doing the improvements for the existing functionality. For example, accrual engine. So before before versions of an SAP, the accrual engine has just like posting the accrual transactions in the previous month and reversing it the current month. But in now in the accrual engine, you can automate everything. So if some improvements is there in the functionality, you will be doing and delivering to the client. So after that, so activities. So what are all the activities will be there in the SAP? So we'll be configuring the system, and we'll be creating the master data, and the end user will be performing the transactions, which we call it as transactional data. So the configurations will be moved under the TR, correct? So as we discussed previously, like the master data, will be creating the master data independently in every client. So this is copied. This is like created in the every client through LSMW or LTMC, and the transactional data is also same. So we'll be using the migration cockpit. So like these LSMW and LTMC we can use only in the systems like on-prem. So if you have a GUI, SAP GUI, there we will be using that. And when it's related to the public cloud, we'll be using the staging like migration cockpit. You will have the data migration cockpit app. In that app, from that app, you will be uploading the data, and from that data will be transferred to the staging tables, and that will be deployed to the actual tables. I'll be explaining you that when we come into the migration process. So after that, where this configuration data will be stored, configuration data, master data, and transactional data, where it will be stored? In the database. In the database, it will be stored. So how it will be stored? In which form? In the form of tables. So S4 HANA uses which database? HANA database. So it will be formed, it will be stored under the tables. We can access the tables through SE16N. So we have so many tables. For example, to access the GL master, GL master data, we have SKA1, comma, SKB1, and to access the accounts payable vendor, so we have LF A1 and LFB1. So like this, we'll have the tables to access the same. To access the transactional data, so we have AC doca, AC doca table. So before we have BSEG table to access and BKPF to access the header and BSEG to access the line item. But now we have an universal source of truth, AC doca table, which is developed from the SAP S4 HANA. So now, as I said, I'll be walking you through the basics. So if you are non-IT background, then let's discuss about basics of accounting. So we have three basic golden rules of accounting. So one is personal account, second one is real account, and the third one is nominal account. So now in SAP, either you will have debit or you will have credit. So either you have debit or credit, right? Now, so what is a personal account? So personal account in the sense it involves all the all the personal transactions which is done by a person or which is done by a person. So now, so what will be debiting? So what we will be debiting? Will be debiting the receiver. So debit the receiver, credit the giver. So for example, if you take, so it is an element or a account which represents a person or an organization. For example, let's take Mr. Sundar. So Mr. Sundar is a person, correct? So we are purchasing the raw materials from Mr. Sundar. So we are purchasing the raw materials, correct? So Sundar is giving us, correct? So what will be doing Sundar? Debit the receiver, credit the giver. We'll be crediting Mr. Sundar and Sundar will be our vendor, correct? So after that, we'll be going for the real account. So what is real account? So real account is the element or account which represents tangible aspects. So now example, so what would be a real account? So in the real account, what we'll do is we'll be debit what comes in and we'll credit what goes out. So mostly in the personal account, we'll be getting vendors, creditors, and capital, and so on, which is personal in nature. Now, what is a real account? So now in the real account, mostly we'll get the assets. So we'll get the assets and liabilities. So which is like when the assets are coming in, so how the treatment is, and when the assets are going out, how the treatment would be. For example, For the real account, so let's take goods or stock account. So in the previous example, we have discussed about we are receiving the raw material from vendor. So we'll be debiting the raw material by using this accounts principle, which is debit what comes in, raw materials coming in, so that we'll be debiting it. And who is the giver? Vendor is the giver. So when first we should question when the nature of transaction is happening. First we should see like what should be debited and what should be credited. So our what is our nature of our transaction? Purchase of raw material from Sundar. So we are purchasing raw material from Sundar. So we have two type of activities here. So one is raw material and another one is Sundar. Now, so we should see that. So this is the raw material. So raw material comes under which account? Real account. So real account, in the what basis we are debiting and in what basis we are crediting. So we'll be debit, raw material is debited like because what comes in, raw material is coming in, so we have debiting it. So from Sundar is giving us the raw material. So Sundar comes under personal account. So based on the personal account, we'll be crediting Sundar. Sundar is a giver. So now, what is a nominal account? So nominal account, in the nominal account, it means the element or account which represents expenses, losses, incomes and gains. So in the nominal account, what we'll do is we will debit all and losses. What we'll be crediting? We'll be crediting all incomes and gains. So for example, salary, salary paid to uh, salary paid by bank. So I have paid a salary through the bank account. So now we have two aspects here. One is salary account and the one is bank account. So what is a salary for me? For me as an organization, salary is an expense, correct? So what is a bank? Bank is an asset for me. So bank comes under real account. So now the general entry would be salary account debtor because salary is an expense. So debit all expenses and losses. So I am debiting it. Now what I will be crediting? I will be creating the bank account because bank is an asset. So what goes out? So my money is going out. So that what I am doing? I will be crediting it. So this is the sample entry. Now, so this is the golden rules. This you should be having in your mind thoroughly. So when I ask like for a personal account, what would be debited and what would be credited, you should have it in your mind. So if it is a debit the receiver, credit the giver. So for real account, what will like what is the treatment of a debit and credit? So debit what comes in, credit what goes out. So this would be in your mind. This should be in your mind. Okay. So after that, so what types? How many types of accounts we have for reporting? So now, how many types of account? First, we have trial balance. So after creating the general entry, we'll after creating the general entries, after creating the ledgers, we'll be creating the trial balance. After that, profit and loss account. After that, balance sheet. So profit and loss account, balance sheet. So the profit and loss, so trial balance contains all the assets and liabilities, comma, expenses and incomes. So to say trial balance contains all the personal account, real account and nominal account. So when you see the trial balance, it contains the assets and it contains the liabilities. For example, we have vendor, debtor and everything. So that is also will be there. So now profit and loss account. So profit and loss account contains only nominal accounts. Now the balance sheet. Balance sheet contains assets and liabilities. So all the nominal accounts will be closed at the year end and will be transferred to the profit and loss account. And the profit and loss account will be shown as the reserves and surplus in the balance sheet. Okay. So now let's see accounting cycle. So what is accounting cycle? So in the accounting cycle, can you say like what and all will be there in the accounting cycle? We have discussed yesterday also. So what would be the flow? First, what we'll be doing? First, a business transaction should happen. For example, purchase of raw material. So the second thing will be posting that business transaction as a journal entry. So after that, all the journal entries will be created as ledgers. After creating the ledgers, all the ledgers will be by the based on the ledgers we'll be creating trial balance. So after the trial balance, what we'll be doing is we'll be creating profit and loss account. After the profit and loss account, we'll creating balance sheet. So this is the accounting cycle we follow. So now let's compare this manual accounting, this manual bookkeeping with the SAP. Now manual bookkeeping and what happens in the SAP. So manual bookkeeping in the sense you are not using any ERP software and you are maintaining your entries in the books. So now from the general entry, everything will be created manually. But in SAP, the business process, like the business transaction will happen manually and the general entry an end user should record, correct? So the end user should record the transaction in SAP. After that, ledger, trial balance, P&L and balance sheet, everything will be prepared automatically. Everything will be prepared automatically based on the config. So all the if you see the ledger, trial balance, profit and loss account, so these will be created automatically through the SAP. Only once you post the transaction in SAP, so the reports are ready. The reports are ready as on the date or as on the month end. So now, so you have seen the golden rules. So based on the golden rules, this is the golden rules of accounting. So based on these golden rules, let's prepare general entries. Let's go for a general entries, and after that, so after the general entries, let's create ledgers. After ledgers, let's prepare trial balance, and after trial balance, let's prepare profit and loss account, and after profit and loss account, let's prepare balance sheet. So once we prepare this manually and we know how the books of accounts are dealing with, then only we can interrelate this with SAP and we can do the configuration. If you go directly to the SAP, you don't understand anything, correct? So now the first thing is we'll be posting the general entries. So to post the general entries, let's create a performer. Journal entry, business transaction. So after business transaction, so what is the amount of the business transaction? After that, what would be the journal entry? So after that, either it should be debit or credit. So after that, what is the amount and what is the reason? So why you are debiting or why you are crediting based on the accounting rules. Now, so let's take the first transaction. First business transaction is, so let's say like XYZ Limited is a new company. So for this company, to start the company transactions, we'll be getting the proprietor will be getting the capital. So first, let's say like capital bought to the business. So proprietor got the capital to the business, 20 lakhs. Proprietor bought capital 20 lakhs. So what would be the general entry? So what and all the rules you use now? So here, can you say like business by bank? So from the bank, he has transferred his capital to the XYZ account. Okay. So now what would be the general entry? So anyone can unmute and say like, so first, what is first? Now we should check like, so we have here capital and we have here bank, correct? So capital is which account? Anyone? Capital is a real account or a personal account?
Real account.
No, because capital is not a real account because this is a personal transaction, correct? A person is getting the capital, so it would be personal account. So what is a bank?
Bank is a real account, I think.
Exactly. Bank is a real account. So capital is a personal account. So what we will do? So proprietor is getting the capital into the company. So he is giving. So if he is giving, what will do? Credit the giver. As per personal account, we will be crediting it. Credit the giver. Now, so bank account is a real account. So based on the real account, what will be doing the bank? It is what comes in. You are getting the money. So money is coming into your bank account. So you'll be debiting it. Debit. So now the entry would be capital account debtor to bank account. So the amount is 20 lakhs, and it would be debit and this would be credit. So like this, let's post more entries. So the second nature of transaction happens. So we have bought the capital to the business. Now we need furniture and machinery for the business to run. We'll get furniture purchased by using bank account. So we have purchased the furniture. So now there is a furniture and there is an bank account. So what is a furniture? Furniture is a asset. And what is a bank account? Bank account is comes under also a asset. So now we have two components here, furniture and another one is bank. So now can you tell me in which, so out of these golden rules, where we can fit the our furniture in? Either it comes under personal account, real account or nominal account.
Real account.
Correct, exactly. Real account, because it is an asset. After that, bank comes under,
Is also a real account.
yes, exactly, real account. So see, like I need your participation, because when you don't participate you feel sleepy, because this is a dry subject, correct? So when we interact, then you don't get sleepy, and you'll be getting these topics, right? So be more uh, involved. Okay, I can see only Abhi is responding. So yeah, let everyone respond, so that I will also understand, like you are understanding what I do, what I am teaching you. Okay, so now furniture purchased by the bank. So now what we'll be doing? So bank is a real account and furniture is also a real account. So based on the real account, so now furniture purchased. So based on the real account, what would be debited and what would be credited?
Furniture account and bank account.
Yeah, correct. So furniture is debited, because debit what comes in, what is going out, bank account. This is credited. So from the bank we are paying the money, correct? For example, 1 lakh. So let's take the third entry. So after we have purchased the furniture, we need a machinery also, right? Machinery purchased. bank account. So you have purchased a machinery. So the treatment, so what would be the machine and what would be
Machinery
the
accounted
bank?
to bank account.
Yeah, exactly. So mission is an asset. We'll be classifying it as a real account, and whereas bank is also a
Real
real
account.
account where is an asset. So the treatment would be the same. Mission account debtor to bank account credit. So suppose take for example, we'll be purchasing the machinery for 2 lakhs. Now, so after we have purchased the machine, so now we need a raw material to produce the finished good, correct? So we need raw material to produce the finished good. Let's buy the raw materials purchased from Sundar and Co. So Sundar and Co is our vendor or supplier. We are purchasing the raw materials from Sundar and Co. Now we have here two components. One is Sundar and Co. and the other one is raw material or stock, correct? So now based on our rules, where we will be fitting Sundar and Co in? Personal or real or nominal?
Personal.
Personal account.
Exactly. So Sundar will come under personal account. So now, so raw material,
Real. Real account.
exactly. Raw material fits under the real account. So now, so now what would be debited and what would be credited? Can you tell the general entry based on this? So Sundar is a personal account.
Sundar
Personal
account
accounts,
and
yeah,
Giver. Sundar account data to
raw material account.
raw material.
wrong.
Personal.
What we are doing? We are getting the raw material, correct? So
Debit was
Sundar is giving us the raw material. So what we should do the Sundar? We should credit Sundar. And what is coming into our business? The asset raw material is coming. So we should debit the raw material. We don't debit the Sundar. Sundar is our creditor. So vendor is our always he is a creditor, correct? So now the raw material is coming in. Stock or raw material account data to. So Sundar account co is a person. He is giving us, correct? Sundar and Co. So in accounting, we have blind rules. One is vendor always has credit balance and customer always has debit balance. We have exceptions also. I'll talk into that. And bank account always has debit balance. It may have debit or credit. So if it is a current account, you know, right, we can take the credit also. And asset account always debit, and if you feel the account is a liability account, it is always credited. And also, for example, if you feel the particular account is an expense account, it's always debited. And if it is an income account, it's always credited. So these can be our blind rules. So if you put this also in your mind, then your accounting entry derivation would be easy. Now, for example, fifth entry would be raw material we have purchased directly from bank. So there we are not creating here the liability to Sundar. Now we have money in the bank account. We have went to some other vendor and we have directly done the payment. So now there are two components involved here. So what are the two components? One is raw material and the other one is bank. So bank comes under, so raw material comes under raw material comes under which account? Personal, real or nominal?
Real.
Correct. Real account. Now the bank also will comes under
Real account. Real
real
account.
account. Correct. So now what would be the entry? So what coming in and what is going out? So real account, what comes in and what goes out. So what is coming in?
Raw
Raw
material.
material. Correct. So raw material or stock is
Stock.
coming in, and what is going out? Money
Bank.
from your bank.
Right.
So this is debited and this is credited. Suppose for example, we have purchased for 50,000. Okay, so now we have raw material. So now we have the machinery to produce, and now our employees need some stationery, correct? Stationery purchased from bank. So now tell me. So stationery bank. So now what will be the treatment of the stationery? So stationery comes under which account? Anyone? So stationery comes under which account? Stationery is an asset. So in which account it will get? So stationery, we are expense, right? So stationery is an expense. So we are expensing. Because of the stationery, we are paying the bank. So stationery will come under,
Debit.
yeah, nominal or real? Nominal. So nominal, it should be, it is nominal and bank is real. So now what is debited and what is credited?
Stationery
So
is debit.
yeah, so stationery is debited. Stationery account debtor to what goes out? Bank account. Suppose I have purchased for 50,000. So the seventh transaction would be now. So we have purchased the stationery, everything. So now we need to pay the rent for the building or a building or something we have purchased. So we have rent paid by bank. So now we have rent and we have bank. So what is the treatment? So now rent comes under which account of the golden rules?
Nominal, I think.
Yes, correct. Nominal account because it is an expense.
Expense.
Now bank. So bank comes under real
Real.
account. Correct. Real account. So for the so what would be the debit and what would be the credit? So based on the rent is an expense, correct? So expense, all expenses and loss, what we will do? Debit. I also
Debit.
said in our blind rules, like if you think anything which is an expense, directly debit it. If you think anything is an income, directly credit it. Now, after that we have bank. So bank, what is a bank account? It is an asset account. So bank is an asset account, correct? So we'll be directly debiting it. Now rent account debtor to bank account. Suppose say we have a rent of 30,000. So after rent, we need to pay wages to the workers, correct? So wages to the workers. So now we have here two components, wages and we have paid from the bank. So what are wages? In which golden
Expense.
rules? Yes, it is an expense. So it is a nominal account. And so bank, we know bank is a real account. So now, so what will be debiting and what will be crediting? Expense. So wages is an expense. For expense, what is our blind rule when we're incurring the expense?
Debit.
Debit, correct? So wages account debtor to so bank. So what we are doing, we
Bank.
are paying from the bank, correct? Paying from the bank. So it should be credited. We are receiving the bank, asset is increasing, so we'll be debiting. We are paying from the bank, our asset is decreasing, so we are crediting. So now, so it's already 9:30. We'll extend it to 10 minutes because our session got late by 10 minutes. And so in this session, we will be discussing about the general entries. And after that, we'll be creating ledger in the tomorrow session. We will be creating the ledgers and we'll be creating the trial balance and P&L account and balance sheet. We'll be complete that in the tomorrow session. So now, so we have one more entry where let's take so after we'll be paying the salaries also, right? So wages are paying to the workers, salaries will be paying to the employees of the company. So wages will be including in the raw material cost, but salaries is an direct expense, but it is not related to the raw material, but it is used to run my XYZ limited. So now salary paid to by bank. So now we have two components here, salary and bank. So now, so what is the salary? It's same
Now,
as previous one, nominal account. So nominal account, what we will do, we will be nominal
debit.
account expense will be debiting, correct? So this is real account. Now the postings would be so debit the salary and credit the bank account. So here the wages I have paid like 50,000. So the salary I have paid like 1 lakh. So after that, then transaction would be so now the raw material is purchased and the raw material is produced by using the machinery and stationaries. Now what is my the second activity? I should sell my finished goods, right? sale of finished goods to ABC and Co. So now I'll be selling to the ABC and Co. So now you got the ABC and Co. After that, you'll be selling. So sales account will come into the picture. So now what is ABC and Co?
Personal account.
Okay, personal account. And so sales comes under
Real account.
no, it is nominal account. So it records income for the period and income belongs to the P&L account, correct? So sales is an income. So it will be like closing the sales account by in the P&L account only, correct? So we'll be not transferring this to the balance sheet. So that sales is a nominal account. So now what would be debited and what would be credited? So we are selling sales. So who is receiving? Based on the personal account, debit the receiver, credit the giver. So now we are giving our finished goods to ABC Limited, correct? So who is receiving?
We are
A-
receiving.
No, here what we are doing is we are selling our finished goods to ABC Co. I am XYZ Limited. So I am XYZ Limited and I am selling my finished goods to ABC and Co. So what is going out from my XYZ Limited to ABC and Co? It is finished goods.
Good.
But so who is receiving it? I am not receiving it. Who is receiving it? ABC and Co.
ABC.
Who is our customer? So now, as per our personal rules, debit the receiver. ABC and Co. will be debiting him. And what is going out? My raw material or finished goods is going out. My stock is going out. So I have done the sales of 4 lakhs. Control V. So yes, now. So these are the general entries which has happened. So raw material purchase, let's take 3 lakhs. So these are the general entries. Tomorrow we'll be discussing some adjustment entries. After the general entries, suppose say in the year end, you may get some adjustments, correct? We will have also the adjustments. Suppose for example, the closing stock. So what is the closing stock value? So and after that we have our 2 assets. So one asset is furniture and another asset is machinery. Furniture, machinery. So for furniture, what is the depreciation? We need to calculate. So the depreciation would be 10% SLM. So for machinery, so what would be the depreciation? It can be 10% WDV. So I'll explain tomorrow like how we can calculate the SM for the SLM for the fixed asset and machinery and for the machines how we will be going for a WDV. So tomorrow we'll be explaining these adjustment concepts and later we'll be preparing the ledgers and we'll be preparing trial balance, P&L account and balance sheet. Okay. So thanks everyone for joining the session. So let's meet
Thank you.
tomorrow.
Thank you, Manoj. Bye.
Yeah, thank you. Bye. Good day.
Thank you, brother.
Thank you, Manoj.
Thank you, Shafi. Bye.
Okay, sir.
Thank you.